Welcome back to another market breakdown. So today we're gonna be speaking about the stock market or ES or the SPY, whatever you call it. Okay, so the situation here is very tricky, and I'm only decided to make this video because of two things. First, Twitter, because Twitter is all viewers right now. I like when all these. I'm sorry to say this, but all these shitty traders on Twitter. I don't know if they actually make money or not, but generally speaking, when they were shorting here, thinking a double chop, I was trying to buy in this breakout, and I don't know, I did a video about this in the past. We're expecting this breakout, and I was thinking we're gonna stop around this bar because it's one uptrust that led to the sell-off. So I thought maybe here there will be some trapped bulls, and actually these ones who also got trapped started loading out right here, and plus it's December, okay, and you know what December is like a negative amount in the stock market, generally speaking. But we are coming into the third culture, which is includes Santa Rally, a lot of seasonality effects that that had me thinking, is this a reversal? Okay, just to give you a situation. I still think this is the first leg and that we're gonna have another leg. But right now, is this is the high of the leg, we still don't know. So for that to confirm, I need to confirm this deviation. Like, okay, be daily, it's gonna look more fractals. So a deviation above this high, meaning a field breakout, we actually come down and we take this high, this low. That is gonna confirm, okay, this is a deviation, and it can easily happen. I'm not saying it's not possible, okay? But right now, the market had me prepared, like lining up for a two-legged move, and it's just perfect that it would be naive to ignore. So this is the first leg. If you measure this leg, with this leg is going to be an EBCD move, which is a complex pullback, and also it lines up with this gap, and also with this. Some bears trying to sell this around the double top, thinking the market is going to crash, but instead they go to breakout. So when the market comes back to their original entries, they're going to try to get out. So that's the logic about this setup. But how to confirm this? Okay, so how to confirm this is a deviation? So for me, okay, here I'm going to make a lesson. Okay, how to separate between a trend reversal and just a two-legged pullback. All right. For example, this move from this B, which is an E, B, C, D, is a two-legged pullback. Okay. Why this is not a fifth wave? Because we didn't actually break above with the gap. Why? Because we just double tap here. Double taps are not perfect. Just to make you really really aware of that. Okay. What I would like to see is that we come back and close this gap, and then we start deviating. And inside this deviation, here's how to confirm. Here's some lessons. Yeah, I don't know if they're gonna teach you this in other places. I don't know. Anyways, so they say this is the first leg. When we come back, second leg. Okay, a two-legged pullback is an E, B, C, D. Normally, it's gonna start coming down, or come do a double tap and convince traders we're gonna come higher and then come down. Okay, that's not what I would like to see. I would like to see five waves. What I mean by leaving gaps. So when the market comes back here, I want at least to see this high and this low, leaving some kind of a gap or leaving a huge gap here. Okay, why? Because those gaps they lead to measuring gaps, and measuring gaps actually delete a lot of times to a trend reversal. Let's say this is a trend, now we are in bearish trend, but the higher context we are still in a bullish trend. So that's why I'm looking at this deviation here. So leaving that gap, I want to see a five wave also not overlapping with this wave and coming higher. So once we break above and we leave a gap here or something here, that's a trend reversal. We can easily do like a double bottom like this or micro double bottom and then start moving higher. It's the same concept, okay? And nothing is different. And that's what I would like to see here. And I would like to see when the market is going higher, like the previous, like leaving a gap or something and confirming the wave, and that's is gonna confirm the deviation. Aggressive entry, I think, is gonna be here. If you wanna be so aggressive and just buy at the market and hope the market is gonna start rallying, and it can work. But if you don't know how to manage your risk, it's not good for you. Even if you buy here, your stop is well defined, but for a breakout higher, and I think we can also, if we start moving with the bull bars closing around their highs, I think we're gonna be able to reach the all-time high. Okay, so this is the all-time high. All-time. I have a I have a position in the DAX. So bad. I have traders on Telegram, so to inform you. Uh, Once this bar closed, I bought at the market, and I was waiting to get them at my fail price. Like it's like this is just a normal two-legged move: high, lower high, another high. So this is the high of the legged move. If I start seeing the price rejection there, I'm gonna cut. It's just how I want you to have like an idea on this is only 5 minutes, okay? But it's also the stop loss is also about the 5 minutes. But stop loss is just you see this red bar is below the 50% of that. If it comes there, it's probably is gonna take the low. Anyways, and it can also do a double bottom here with this low with B and just start moving. And also I have a trigger plan for that. If we start rejecting resistance, previous resistance as support and using it and go higher, I think it will be safe to get in. And yeah, that's I'm trying to make this video very quick and not make it 20 minutes. Yeah, that is the context. I think it's reasonable to think that we can go much higher. What is the all-time? Yeah, this all-time high. And if we break the all-time high, I think 5,000 is gonna be a good candidate to reach around the center rally, and we start pushing higher. But I still think there will be another second leg, and probably it's gonna be a bad leg. I don't know when, but first leg, probably a second leg from here, which is gonna make a triangle or a channel where we still don't know. So we trade what we see. Okay, I hope the setup is clear and also the confirmation. What would you like to see to confirm is that also we since yesterday was a very strong close. I don't know if you are noticing. Yeah, this bar double bottomed with this bar. I mean, took the this low and closed it around its high. So at least I think a second leg up of this bar. Okay. So because if you go to the 4 hour, that's a breakout on lower time frame. So we broke around this high. So high, probably a second leg higher. We can maybe double bottom or something. We start pushing high. So that's why I'm trying to buy today the DAX, or because this is the New York session, I trade the DAX, and New York I trade the US indices. All right, that's it, folks, and I hope you find this more easy to understand. How to get in? You can when the market is going up. For example, you can use a moving average. So when we close above the moving average and we can test it, you can use that a moving average. You can use previous support becomes resistance. Anything works when the context is correct. Okay? No one is going to tell you this. Everything works when the context is correct. For example, this test of the moving average worked. Why this one didn't work? Why this one? Because the context, the system is actually lining up with the moving average. It's not because the moving average. Just that's what many traders get. And I like this. I like this indicator. I use 21, 50, 200, line it up all together. I think the best setup is when they all line up around one level or something. That's when I get really good swings or buttons or highs. Anyways, I think that's all. See you with another analysis. And just to show you how the legs are. One,